Welcome back, YouTube. My name is Nigel Schroeter, aka the Credit Sensei, and today you are tuned in to the best finance channel on YouTube, and we're going to be specifically talking about credit. All right, today we're going to be talking about starting off your credit profile and building your credit profile. All right, this video is going to be more general tips and tricks. It's not going to be very in-depth. I have some in-depth videos on starting off your credit, as well as I will be releasing some more on some newer strategies and things that I've observed with building your credit. So the first thing that I want to talk to you all about today is remembering that credit is not a race. Okay, slow it down, take your time, build your credit, build your profile, and have your mind set out on a goal. All right. So when you start building your credit, I want you to write down what is the reason you're building your credit for. What is it that you want from building your credit? Okay. So I want you to actually put down on a piece of paper, I want a house, or I want to finance a car, or I want to have this credit card, or I want this, or I want that, and set out and make that your goal and do the things along your credit journey that are going to allow you to accomplish that goal. Therefore, if you want to purchase a home, you need to have all of the collections removed off of your report. If there are any that you can't get removed, you want to at the least settle, if not pay those collections off. You want to have a cash reserve sitting there so that you have a down payment to make that purchase. You want to do everything that you can to align yourself. And remember that this is not a process that you can rush. Okay, this is why I always tell you all to build credit before you need credit. Because when you build credit before you need credit, then when you actually need it, you have it. So this comes with opening up revolving trade lines, credit cards, checking lines of credit, personal lines of credits, whatever you're using to build that revolving portion of your credit report, as well as opening up installment credit. When you're purchasing a home, your installment credit is going to make a very big factor in your purchase. Them being able to see that you're able to make on-time monthly payments without missing a payment. So you want to make sure that you're responsible with making those payments. When you show that you're responsible with making those payments, that's going to allow you that opportunity to build your credit report to where the banks want it to be to purchase a home. Set out a timeline when you're building your credit. Say, I want to start my credit at this point with these cards or this loan. Then I want to get this at this point. I want to get this at this point. And my end goal is to get my home in a year or 2 years or 3 years or whatever it is, and have that process set out and outlined. So that way you don't have to worry about deferring from it. Once you set up that tracking, you say, okay, I'm getting a secured card today. In 6 months, I'm going to go get a Freedom Flex and a Amex Blue. 6 months from then, I'm going to go and get a Business Inc. card, and then maybe I want an Amazon card because I like shopping on Amazon. Maybe I want to get, maybe I want to just start off with the Capital One Platinum Secured as my secured card. I couldn't get into, Navy Federal or somewhere like that for a different type of secured card, or I got denied for Discover. So have your plan lined out, have a backup plan, and outline everything that you want to do and at what point in your process you want to accomplish each individual thing. So that way, once you have that outline, you're going to be perfectly set on exactly what you want. If you know you want a specific credit card and it's, for instance, a Chase card, and you have the 524 rule, don't go and open up 3-4 secured cards, because that's going to put you 2 years behind in your journey for being able to get to those Chase cards. If you know that you want to purchase a house, don't go and make a bunch of large purchases before you purchase that house, because that's going to crash your debt to income ratio. And the more debt that you have and the less income that you have, the more that you're going to in turn be paying in interest rates, the less house that you can buy, because Your debt to income ratio affects what type of monthly payment you can have on a house. So when your debt to income ratio is high and the banks see that, what do they say? This person can't afford the house. We're not going to give it to them, or we're going to give them much less house than if they didn't have this debt. So you want to put yourself in the appropriate places for what your end goal is and what you're trying to accomplish. Once you're able to put yourself in those appropriate places, then you're going to see how your plan is going to fall into action. Also, remember that along your plan, you cannot underwrite your own credit cards. So, what I mean by that is, yes, you can do pre qualifications. Yes, you can do everything to have your credit report set up to where you feel confident on applying for a certain card or confident on getting certain approvals. However, you cannot force a bank to approve your application. So if you apply for a card at month 6 and that was when it was on your plan, however, you don't get approved for that card, you're either going to have to come up with a substitute card to apply for and see if you can get approved for that substitute, or you're going to have to wait a little bit more time, maybe postpone getting that card and figure out what it is that that bank wants from you that they're not seeing. And once you figure out what it is that that bank wants, then you're going to actually be able to take what that bank wants and turn it into what you have. And when you're able to do that, you're going to be able to increase your score. You're going to be able to get higher approval odds. You're going to be able to get approved for those things that you want. And a lot of the times the answer is time. And sometimes the answer is going to be to work through some type of problem, pay something down, dispute something, negotiate something, do what you have to do and put in that work. So remember that your credit journey is going to be individualized. It's going to be characterized to the things that you want and the things that you need. So when you're on your journey, it's very extremely important that you take the time out on your journey to invest it into your journey to get to where you want to be in your credit journey. And that is going to allow you to take yourself to the next level and to get where you want to be and accomplish your credit goals. So remember that this is an individualized journey. It is not a race, and you have to do things according to your resources. And as much work as you put in is as much as you're going to get out of it. So sometimes taking that deferred gratification is going to take you to the next level. With that being said, as always, thank you guys for tuning in. Thank you guys for watching. We'll see you in the next video.